The world economy was thrown into disarray on April 3, 2025, as former U.S. President Donald Trump announced sweeping new tariffs on imports from major trading partners. These tariffs, ranging from 10% to a staggering 49%, targeted goods from Europe, China, and even developing countries. The move sent shockwaves through global markets and raised fears of a trade war that could derail the already fragile global economic recovery. Trump, known for his protectionist stance, argued that the tariffs were necessary to protect American jobs and industries from unfair foreign competition. However, many economists and business leaders criticized the move, warning that it would harm consumers, disrupt supply chains, and ultimately hurt the U.S. economy. The tariffs, which took effect immediately, target a wide range of goods, including steel, aluminum, cars, electronics, and clothing. The European Union, China, and other affected countries have all vowed to retaliate with their own tariffs, raising the specter of a tit-for-tat trade war that could escalate quickly. The impact of these tariffs is likely to be felt around the world, as businesses and consumers grapple with higher prices, reduced trade, and increased uncertainty. Global stock markets plunged as news of Trump's tariffs spread, reflecting investor fears about the potential impact on corporate profits and the broader economy. The Dow Jones Industrial Average, a key barometer of U.S. stock market performance, plummeted by 2.5% on the day after the announcement, marking its worst day since 2020. Other major stock indexes around the world followed suit, with the S&P 500 falling 2.3%, the Nasdaq Composite dropping 2.7%, and European markets also experiencing significant declines. The FTSE 100 in London shed 2.1%, while Germany's DAX index tumbled 2.4%. The sell-off was broad-based, with shares of companies in a wide range of industries hit hard. Technology giants like Apple and Nvidia saw their stock prices fall, as did automotive companies like Ford and General Motors. Luxury goods makers including Swatch, Richemont, Kering, and Burberry were also among the hardest hit. The sharp drop in stock prices reflects growing concerns among investors that Trump's tariffs could spark a global trade war, leading to higher prices, reduced consumer spending, and slower economic growth. The uncertainty surrounding the tariffs and the potential for retaliation from other countries has made investors wary of putting their money at risk. The specter of a global recession loomed large as economists and policymakers grappled with the potential fallout from Trump's tariffs. The tariffs, which target a significant portion of global trade, threaten to disrupt supply chains, increase costs for businesses and consumers, and dampen economic growth around the world. Oxford Economics, a leading global forecasting firm, projected that global GDP growth would slow to below 2% in 2025, the weakest pace of expansion since the 2008 financial crisis, excluding the pandemic-induced recession of 2020. This forecast represents a significant downgrade from the firm's previous estimate of 3.2% growth for the year. The tariffs are expected to have a particularly severe impact on export-dependent economies like China and Germany, as well as developing countries that rely heavily on trade with the United States. The International Monetary Fund warned that the tariffs could lead to a synchronized slowdown in global economic growth, with potentially devastating consequences for developing countries. The tariffs have also raised concerns about a return to protectionist policies, which characterized the global economy in the 1930s and contributed to the Great Depression. Economists fear that Trump's actions could trigger a wave of retaliatory tariffs from other countries, leading to a downward spiral in global trade and economic activity. Trump's tariffs have ignited fears of rising inflation, as the costs of imported goods are passed on to businesses and consumers. Economists warn that the tariffs could lead to a surge in prices for a wide range of goods, from cars and electronics to clothing and food. The tariffs are expected to have a direct impact on prices, as businesses that rely on imported goods face higher costs. These higher costs are likely to be passed on to consumers in the form of higher prices, leading to a decrease in purchasing power and a potential decline in consumer spending. The tariffs could also contribute to inflation indirectly, by increasing demand for domestically produced goods as imports become more expensive. This increased demand could lead to higher prices for domestic goods, further fueling inflationary pressures. The Federal Reserve, the central bank of the United States, is facing a difficult balancing act as it tries to manage the potential inflationary impact of the tariffs while also supporting economic growth. The Fed may be forced to raise interest rates more aggressively to combat inflation, which could slow economic growth further. Section 5. Uneven impacts. How different countries are affected. Trump's tariffs impact countries unevenly, hitting some harder based on trade ties and supply chains. China, the world's second-largest economy, faces significant challenges. The EU also feels the strain, with reduced economic growth. Developing countries are particularly vulnerable, risking job losses and slower growth. Section 6. Trade wars escalate, retaliation and rising tensions. As expected, Trump's tariffs have been met with swift retaliation from trading partners around the world, escalating fears of a full-blown trade war. The European Union, China, Canada, and Mexico have all announced retaliatory tariffs on a range of U.S. goods, targeting politically sensitive sectors in an effort to maximize pressure on the Trump administration. The EU, in a coordinated response, imposed tariffs on iconic American products like Harley-Davidson motorcycles, Kentucky bourbon, and Levi's jeans. China, in a more aggressive move, slapped a 34% tariff on all imports from the United States, further fueling the sell-off in global stock markets. Canada announced matching 25% tariffs on U.S. vehicles, a direct response to the tariffs on steel and aluminum imports from Canada. Mexico, another key U.S. trading partner, also retaliated with tariffs on a range of agricultural products including pork, cheese, and apples. These retaliatory measures threaten to further escalate the trade dispute, creating a vicious cycle of tit-for-tat tariffs that could spiral out of control. As each country seeks to protect its own interests, the global trading system is at risk of unraveling, with potentially devastating consequences for the global economy. Section 7. Industry in the crosshairs. Winners and losers in the tariff war. Tariffs are shaking industries worldwide, creating winners and losers. Some benefit from reduced competition, while others face higher costs and disrupted supply chains. Industries relying on imports, like automotive, are hit hardest. Higher steel and aluminum prices lead to slowdowns and layoffs. Infiniti halted U.S. production, while GM ramped up in Indiana. Ford offered employee pricing to boost sales. Luxury goods makers face tariffs on European leather and Swiss watches. Brands like Gucci and Burberry brace for sales declines. Domestic steel and aluminum producers see short-term gains, but retaliation could hurt exports and the overall economy. Section 8. Political backlash. Global leaders condemn Trump's move. Trump's tariffs have drawn sharp criticism from world leaders, who have condemned the move as protectionist, reckless, and harmful to the global economy. The tariffs have also strained relations between the United States and its key allies, raising concerns about a breakdown in global cooperation at a time of heightened geopolitical tensions. French President Emmanuel Macron, a vocal critic of Trump's trade policies, urged European companies to halt investments in the United States in retaliation for the tariffs. Macron called the tariffs a grave mistake and warned that they would lead to a lose-lose situation for all countries involved. Canadian Prime Minister Justin Trudeau, whose country has been particularly targeted by the tariffs, called the measures insulting and unacceptable and vowed to defend Canada's interests. Trudeau's government has been a staunch advocate for free trade and has been critical of Trump's protectionist policies. Even within the United States, Trump's tariffs have faced bipartisan opposition, with both Democrats and Republicans expressing concerns about the potential economic fallout. A bipartisan group of senators introduced a bill seeking congressional approval for any tariffs lasting longer than 2 months, in an attempt to rein in the president's authority on trade. Section 9. Conclusion. A world on edge uncertainty grips the global economy. The global economy is teetering on the brink of uncertainty as the trade war ignited by Trump's tariffs escalates, threatening to derail the fragile global recovery and plunge the world into a new era of protectionism. The tariffs have already sent shockwaves through global markets, disrupting supply chains, fueling inflation, and raising fears of a recession. The situation remains fluid, with no clear end in sight. While Trump has expressed openness to negotiations if other countries offer concessions, his administration has also shown a willingness to escalate the trade war further. The retaliatory tariffs imposed by other countries suggest that they are not backing down, setting the stage for a prolonged and potentially damaging trade dispute. The ultimate impact of the tariffs will depend on a number of factors, including the duration and intensity of the trade war, the response of businesses and consumers, and the actions of policymakers around the world. However, one thing is certain: the global economy is facing a period of heightened uncertainty and risk, and the stakes are high for everyone involved.